The 2024 U.S. election has everyone talking, not just about the candidates but also about what their victories could mean for the stock market. Whether it's Trump or Harris, investors are wondering, will the stock market soar or struggle under their leadership? It's a big deal because their policies could make a huge difference, especially for the tech companies we've all come to rely on. So let's dive into this video today to find out what might happen. Former President Trump wants to lower taxes and add tariffs, while Vice President Harris is focused on cutting consumer prices. Both blame each other for issues like inflation and housing shortages. As they argue, Wall Street and Silicon Valley are left wondering what a Trump or Harris win would mean for the economy. There's concern that a new president could introduce regulations that slow down the rapid growth of artificial intelligence. Chip makers worry about the future of Taiwan's chip industry and the possibility of the U.S. restricting tech exports to China. Cryptocurrency supporters are also watching closely. Plus, investors are curious about how much the next president will tax corporations. Harris's sudden rise in the race has left many investors seeking more details. Mark Malik, chief investment officer at Siebert, mentioned that people were surprised by Harris's quick move, and now they're starting to think about what her presidency might look like. Another important factor is which party controls Congress. If different parties control the White House and Congress, it could make passing laws harder. However, the president still has significant power over trade, antitrust laws, and immigration policies. Harris's late entry into the race has energized Democrats, creating a new dynamic in the 2024 election. A Harris administration could introduce policies aimed at reducing consumer debt. Alex Morris, president of FM Investments, pointed out that Harris supported the Biden administration's student debt relief plan, signaling a focus on similar policies in the future. Fighting costs via antitrust actions. At a rally in Raleigh, NC last week, Vice President Harris focused on addressing rising consumer costs with a strong emphasis on antitrust actions. She specifically targeted the food production industry, stating her commitment to ensuring fair competition. I know most businesses are creating jobs, contributing to the economy, and playing by the rules, but some are not, and that's just not right, Harris said. Presidential candidates focus on inflation. Both Trump and Harris are focusing on inflation. Trump criticized the Biden administration, saying inflation has decimated people, while Harris, during a speech in Atlanta, promised to tackle high living costs and fight price gouging from day one. However, how she plans to do so remains unclear. For investors, uncertainty lingers around tech stocks, with concerns about AI regulation, tariffs, semiconductor export controls, support for Taiwan, and cryptocurrency policies under either administration. Taiwan and the doomsday scenario for chip makers. Geopolitical tensions surrounding Taiwan could significantly impact both candidates and the stock market. A Harris administration is expected to maintain strong support for Taiwan. In contrast, Trump's suggestion that the island should pay the U.S. for protection from China has raised concerns. Analyst Delevska views Trump's comments as harmful, particularly for Taiwan Semiconductor Manufacturing Company, TSMC, a key player in the global chip-making industry. TSMC supplies essential semiconductors to major tech firms like NVIDIA, Apple, Broadcom, and AMD. These chips are crucial for various products, from everyday electronics to automotive components. During the COVID-19 pandemic, chip shortages severely disrupted vehicle production. Does the stock market perform better under Republicans or Democrats? Republicans often promote themselves as the party that supports business, while Democrats focus on challenging what they see as unethical practices by big corporations. But does this mean the stock market performs better with a Republican president than a Democratic one? Not necessarily. Since 1957, the S&P 500 has shown a median annual return of 9.9% during Republican presidencies, excluding dividends. In contrast, the median return during Democratic presidencies has been higher at 12.9%. Congress's composition also plays a crucial role. A divided Congress has historically been favorable for the S&P 500, regardless of the president's party. From 1950 to 2023, the S&P 500 averaged an annual return of 15.72% with a Democratic president and a divided Congress. During the same period, a Republican president with a divided Congress led to an average annual return of 12.2%. So while party affiliation can influence market performance, a divided Congress often leads to better stock market results. Will Harris or Trump be better for the stock market? The truth is, no one can say for sure whether Kamala Harris or Donald Trump would be better for the stock market. However, there is a clear strategy that investors should follow regardless of who wins the election. Focus on the long term rather than short-term fluctuations. Historically, the stock market has always increased over the long run, regardless of who occupies the White House. Presidential administrations come and go, but American companies consistently work to generate profits for their shareholders. While elections can influence market conditions, maintaining a long-term perspective is far more important. So while it's impossible to predict which candidate will be better for the stock market, the best approach is to stay invested and think long-term. Who do you think will win and how it will impact the stock market? Share your views in the comments below and subscribe for more.